Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, June 22nd, 2023. I am Frank Ochoa, aka PivotBoss. Good morning here. Taking a look at the ES in the daily time frame right now. You'll notice the ES trading within a relatively narrow range right now, 43% of average range. Just 20.5 points on the day so far. This thing's been averaging north of 45 points per day, and 47 on a 10-day, 55 on a 5-day basis. So even more in the most recent market. So again, if today turns into a higher range day, you're likely going to see something north of 50 points today. Now, can price reject the previous session's lows here? That's going to be the question here to ask. You have this pullback right here, which is in line with some of the pullbacks that we've seen lately. These pullbacks here have been relatively modest. You've had a very bullish uptrending market here. A test at the 8-period average. If there's a strong rejection that can happen below this low here, there is the potential for a bullish outside day to the upside, and perhaps maybe even a retest of the previous highs into 4,500 over the next several days. So again, can we find a rejection here of prices below the previous session's low? That's 44.03 half, and at the moment a box has developed below that level here on an intraday basis, and that could lead to a squeeze down the road. A squeeze through 44.05 could open up a return back to the previous session's midpoint, 44.21 on an intraday basis, and then perhaps the other side of the range for an outside day in the best case scenario. Now here's the thing. If price cannot get back above 44.05 here, and we start to see downward price discovery, given the current trend we've seen to begin the week, and if we continue that to the downside, we could be looking at a rotation that takes us way down, perhaps all the way back toward 43.50 in the worst case scenario here. We're at 400. If we have a 50-point day today, that would take us down toward 43.50 at the moment, give or take. So again, we could be looking at a massive failure here if we do not get a rejection of the previous week's low. Keep in mind, we have Fed Chair Powell coming up again for testimony at 9 a.m. Central Time, day 2 of that testimony, and that could lead to additional movement up ahead. If we take a look here at the NQ, the NQ has been the most bullish. We've seen this thing really push higher on these rotations out of the bullish Pima trigger zone here, and here we are again inside that zone. Again, in an uptrending market, any pullbacks into that zone are bought for a rotation back to new highs. You pull back again, you see a rejection, back to new highs. You pull back again, new highs here, and here we are again. Now at some point this pattern breaks down on a failure, but at what point does that happen? Do we see another bounce opportunity back to the upside? And yesterday we mentioned 15K or thereabouts would be the zone to watch for a pullback and potential rejection. If we can get that rejection, we could return right back to the previous highs, and perhaps even a bit beyond those highs. 16K, 15.8 to 16K could be above in the best case scenario if we were to see another bullish rotation of this magnitude. If this is a failure, again, failure to hold 15K and failure to rotate back above the previous session's low, that could open up a kind of a stop run day situation, and 14.6 could be the next target down below up ahead. So again, how's this going to play out? Keep an eye on the previous session's low for signs of rejection. Above 15.030, that really opens things up to the upside here for bulls, at least on an intraday basis. Taking a look at crude oil. Right now, crude oil trading range bound over the last 4 sessions here this week, mostly range bound. Still in a downtrend after a bounce. The outside day that developed the previous session, or a couple of sessions ago, didn't really pan out right away, and instead we've seen a little bit of a hold here. But really, this thing's not able to get above 72s at the moment. And, you know, again, while we are trading right in the middle of the zone, we could see a move to the upper end. We could see a drop back in. this range remains the range to watch, and at the middle of the range just doesn't make for the easiest entry points here. But again, if we are going to drop and break into 67s up ahead, that could lead to a significant breakdown with more downside into the 58s and perhaps as low as 56 here, which is the CVPOC here over the last 5 years. So again, somewhere between 56 and 58 could be a good target down below if the 67s are broken. Until then, we remain within a very clear range, and that could continue to keep prices in check until that expansion wave occurs. Taking a look now at gold futures. Gold had a strong developing rejection in the previous session, but really gave it up. It gave it up later in the day here. Didn't turn out as strong as it really could have. And instead now price is pushing through the midpoint of that session. That midpoint also is in line with the 1940 edge. And this is a potential breakdown moment here for gold. Again, 1940 is the key level here. We mentioned before, if this thing can hold on to that rejection, because the rejection looked really, really good yesterday early on. In the final hours of the day, it gave some of that back, and now we've seen this thing run back down. If a rejection is to occur at this end, you snap back toward the middle of the range, 1970. There's a shot to go across the range. But in a failure instance like this, where you have price below the previous mid, if it persists in that way throughout the day, you're going to start to see a downward expansion phase that could ultimately take us to 1886 over the next several days. And then beyond that, you start working your way down toward the 1800 to 1830 levels. So keeping an eye on this zone here today. How does price respond off 1940? Lastly, taking a look at the YM. The YM up here showing increased volatility day over day for the most part. You've seen a little bit of a failed high here and a snap back to the other end of the range. It's this side over here where we want to see what happens next. 34K is right here. Do we get a rejection of prices below this low and snap back within the range? That could take us higher as we stay in this zone here. A failure at 34K, and now you're working your way back down toward 33,315, 33,436. That zone, and you have the previous mid here as well. So you have a high confluence of targets down below if you can't hold 34K. So right now, watching this area very closely. The previous week's low, that's this level right here. It's 34,100 thereabouts. So again, if you were to drop down into 34K, you'd take out that low, and if you can recover back above that low, that could open up a bullish situation back up this range. So keeping an eye on the previous week's low up ahead. All right, that is it for now. We'll see how this develops into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.